Good morning. Good morning, ladies and gentlemen. Welcome to our third session of the Personal Financial Management Training, DTB and Zurich Consulting. We are on Module 3 today, which is creating a practical budget. Thank you so much for being a part of these sessions and being very engaging. We've had 2 modules in the past 2 weeks. The first one was understanding your financial position. Then we went on to the key pillars of financial security. So thank you so much for your commitment and for showing up for these sessions. And we really do hope that you're beginning to make the necessary changes when it comes to managing your finances. So karibuni sana, you can say hello on the chat. As always, what have your key takeaways been so far, where you're joining us from, all that good stuff. We really enjoy engaging with you on the chat, on the Q&A tab. So karibuni sana, karibuni. And even as we continue joining, let me just give a brief recap of the last 2 sessions that we've had before now we go into the session for today. We've, understood what money says about us. I remember when we engaged on that and what really are our spending habits and our relationship with money. And we've covered the stages of financial wellness, right from survival to abundance. So we've gotten to understand where we lie and the type of work that we need to do to move to where we want to be. And we've looked at how we can enhance financial stability and passive income. We've learned to plan with purpose, even for things like enjoyment and black tax. We've understood the importance of planning for all of that. And we've also learned nuggets like the 24-hour rule, which is delayed gratification. If you need to purchase something, maybe give it 24 hours, a big purchase, so that you can make a sober decision. We now then went to module 2, which was the key pillars of financial security. And we got to hear from you what was the first income you earned and what you did with it. Some of us appreciated the important people in our lives. Some of us went straight to sherehe, and it's allowed, and we covered some case studies where we saw different, people where we had Joseph, who started his financial wellness quite late, but was able to be consistent and disciplined. And I remember a lot of you related with Joseph and felt that you needed to start your financial wellness journey as soon as possible. So we learned that building wealth is about habits, and that discipline and consistency. We've also looked at the different investment options. And I think throughout the training, we've had very reflective questions, which I'd encourage all of us, even post these trainings, to go back and go through those questions so that we can continuously think on our financial wellness journey and think on ways we can improve. And I think so far we're experiencing a shift, and maybe you can, can share with us if that's what you're experiencing as well, of how we can better view and manage our finances. So today's session is quite exciting. We are going to go into, the basics and also understanding the making of a budget, practical ways we can implement some of these lessons that we have been learning. And so I'm personally very excited about the module, and I hope you all are too. Again, you can always share what are some of your expectations in the chat and what you're looking forward to. So for the first 2 modules, we had Elizabeth take us through, and today we have Joseph. So I'll just read Joseph's profile so that you can understand who our trainer is today. So Joseph Mukoko is a seasoned business development and operations expert with over 17 years of cross-sector experience spanning banking, energy, and SME support services. He is also a certified national trainer, mentor, and curriculum developer, having worked with leading institutions such as GIZ, SME Founders Association, and Christian Business Angels. He holds a degree in economics and business and has undertaken executive training at Strathmore Business School, alongside global certifications in leadership, entrepreneurship, and strategic planning. So Joseph is a new trainer today, Naomi, to answer your question. And so without much further ado, I would like to welcome Joseph. Karibu sana to the session.
Thank you very much, Mantui, for that kind introduction, and welcome all of you to our third session of the 4-part series that we've been having, courtesy of DTB, Diamond Trust Bank, and we are grateful that you are all here with us. This series has been aptly named Financial Wellness, from confusion to clarity. Have you ever felt you had money, then you don't know where it has gone, but you remember you had money, but then you can't even tell where it has gone? Those are some of the conversations we are going to have today. And it also happens to us who happen to be trainers in this space. I also happen to be an associate at Zurich Consulting, working under Liz, trying to make sure that we understand where we are going. So our first activity of the day is a small ice-breaking session. If I gave you a detailed statement of your income and expenses from the last 3 months, would it surprise you? Or confirm what you already know? Put it on chat. We would like to see those answers. And what would you hope it says if you know and you don't know? So if you don't know, would you be shocked if you looked at some of the expenses where money is going out? And if you already know, what are you doing about it? In these changing global economic times, it's very important for us to have an understanding of where our money is going to. So let me see some of those answers on chat. Omantu, you can help me read out some of the answers on chat?
Yes. So we have Roslyn who says, I'm chasing money the way you chase a jogo to slaughter. And then, but kushika jogo ni kama ndio rahisi. Lauren tells us it might just be shocked. And then Irene says she'd also be shocked. So we have a lot of people who would be surprised, would be shocked. Yeah, that's the general sentiment. Yeah.
Thank you. And so do you have a conversation with money to tell it where it goes, or it disappears before you have done that? That one is a reflection question. Ask yourself, when it comes in, what happens? Most circumstances, when we are talking to business owners, they tell you, I am making this money, but I have no idea where it has gone to. So in one word, just describe the word budget, even as we look at our persona for the day. You can put it on chat even as we go on and talk about the persona for the day. Our persona today is Grace. Remember last week we had Joseph? And I don't know why Liz chose Joseph. I don't know if I was the Joseph she was talking about, but maybe we will get to see and know as we go along. But our persona today is Grace. So Grace ran a successful salon and beauty shop in Kisumu, and everything looked amazing and great, and clients loved her. Suppliers are just coming, and then the shelves are full of cosmetics all the time. But behind the scenes, what most business owners go through, Grace was thinking, anxious. I had sales at the end of the month. She's looking, trying to pay her bills. She doesn't know where the money was going to. So she's having to reborrow, run to DTB Kisumu to get an overdraft for 2 weeks so that she can pay salaries. She's delaying paying rent, and then she's using mobile loans to pay staff. I have looked down because mobile loans are like Shylocks, whichever way you look at it. But then the daily sales were strong. And she's telling herself, can I get more customers? But the more customers she got, the more money disappeared. So she decided to attend a workshop like this one on budgeting and cash flow, and it clicked. The problem was not money coming in. The problem was management of the money coming in. So 2 things she did. One, she started tracking all the income and expenses daily. That allowed her to see where everything was happening. Then she did a budget that took care of stock, salaries, and most importantly, money in her pocket, which is a salary for herself. Something that we forget to do as business owners. And so because we have access to the till, we pick to pay saying, I will account for it. Then you don't know where the money has gone to. You're here thinking, hey, so what happened? But you see, you used part of the business money to sort out your expenses. Further than that, because now she had an idea of where her money was going to, she started saving slowly. Remember the conversations we had in the first webinar and the second webinar? She started creating a buffer. And within 3 months, she had reduced her debt level by 60%. But then she also stopped having impulse spending. By having a budget, she was able to look at what stock moves, what stock does not move, and the stock that doesn't move, she would not invest a lot of capital in it. And then she expanded her business and was able to pay herself without guilt. Most of us are like Grace before her turnaround, busy, earning, but constantly anxious. And why do I say that? Because even when you're employed, remember you're a brand as a person. So you going to business, to work is like a business. We need to look at budgeting, not as a burden, but as a tool that can enable us to grow both as individuals and as a business. Very critical. We have goals, we have dreams, and I like it that most of us were saying, I can confirm where my money is going to. I can confirm where ABCD is happening. How different then can we enable things to happen? If you were to take a list of pen on paper and write down, as we speak currently, what are your sources of income? And for those who are courageous enough, you can put it on chart. 4, 5, 3. What are your sources of income? For us to begin the budgeting conversation, we need to be very clear about where our money is coming from. Clear where our money is coming from. How is it checking in? Whether it's through M-Pesa, through bank account, through a mobile app. Where is your money coming from? So you can look at it, could be a salary, could be business income, could be rental income, could be side hustles. So list all of them down. That's where the budgeting conversation begins. By you knowing what is coming in, so that when you have to come and deal with outflows, then you can control that parameter. At times we get paid, maybe you are called somewhere, you did a gig, the money just came in. Do you account for that cash? Where do you put it at the end of the day? It's part of your income sources. If you're not so sure what to do with it, I think there's M-Shwari and I think there are other apps, including our own app at Zurit, that can help you track how your money is coming in and where you're placing it. Why do we have to do that? Remember, at times, earnings fluctuate. And when earnings fluctuate, then we are not able to properly see ahead. But then, that is not a stopper. If the earnings fluctuate, we have an option to then use our average income, knowing this is how much my side hustle gives me. If it is dividends and bonuses coming in, maybe from your SACCO, maybe from stocks and shares at the end of the year when they declare a dividend, then you will also be able to account for it. Now, by us having control of what we are doing, then it enables us to see ahead. Why does it enable us to see ahead? We all desire. Is there anyone here who does not desire growth? We all desire growth. We all desire more. We all desire to be able to grow. When we look at our income and it is not matching our expenses, then we have an option to be able to increase our income. And what would we do? we could either start a side hustle. And side hustle could come from hobbies, which you can be able to convert to generate income for you, or you have a skill that someone else needs. Remember, business is about solving problems, offering solutions. Maybe you're sitting on something that someone else can be able to pay you for. Have a look at it. Then maybe for you to generate more revenue, to match your expenses, you need to upgrade your skills. And you can do this by having a skills gap test. Zurich has one. I hope we will be able to share it by the end of the 4th webinar. And you look at where are the gaps. I desire this position. This position will help me grow faster. Believe you me, ladies and gentlemen, promotion will not come if we are not investing in ourselves. We must invest in ourselves. And there are very many places for you to invest in yourself. Now, there are courses all over online, local, international, at affordable costs, some which are free, but then if you need the certification to show your HR manager, you would need to pay a small token for it. Invest in yourself. By investing in yourself, you even increase the value that you're offering and demand a higher ticket price. Remember, if you go through the template that we shared, and I think it has been shared on chat, on budgeting, it gives you an opportunity to see where you are at, and then remember the dreams and the desires that Coach Liz was taking us through, where you would like to be. It is very possible to get there. I know at times the economy is tough, but even when the economy is tough, there is still money circulating in the economy. So for us to be able to tap into this, ladies and gentlemen, myself included, you need to be able to tap and find out what else can you do to be better. Before I came into this conversation earlier on in the morning, I had a coaching session with Liz, and the conversation was, what are you doing to improve your skills? What did you do last year? What are you thinking of doing this year? And I also asked her, so Liz, what are you going to do for you to grow and be better? The conversation was, let us upgrade our skills. Ladies and gentlemen, the world is going global, and with digital, you can be able to offer services from where you are remotely that will generate revenue for you. And other than that, when you look at the economy, then you will figure out what other problems can you be able to solve for the economy. And as we are looking at this and asking ourselves, where can I start my business? I would like us to play a very quick exercise and put the answers on chat. From where you're seated or where you're standing, please look around and very fast, in 2 minutes, put on chat, how many business ideas can you identify? And as you put those on chat, let me ask Mantui, any questions on chat so far?
We just have a question around MMFs and investments, which I think we'll probably cover next week. Maybe we can also advise. Yeah.
Okay, we will talk briefly about it later today at the end of the session. But then, yes, it's good to have it, but we'll discuss it at length next week. Please do not fail to come into the session. So, ladies and gentlemen, let me have those answers on chat. Very, very fast. How many business ideas have you identified around where you are? If I was to ask you right now, what business do you think you can? Oh, thank you. Thank you. Okay, 2, 1, 3 to 4 ideas. Excellent. 4, 3. Thank you. So what kind of ideas are these you're identifying around you? Aha, I like that. Selling lunch to your co-workers Mantui, will you kindly be able to share the template? Yes,
Yes,
the template will
yes.
be shared.
Yes, it's on the chat. Yeah, let me reshare it.
Thank you. Cyber services, therapy services, delivery services. Excellent. Having a water refill station. All right. Thank you. I've seen someone saying that the actualizing is an issue. Please stay tuned. At the end of the last webinar, I think Liz will be able to share a small template on how do you actualize your business ideas. But it is possible. There is a way for us to look at it and be able to grow. And the reason why we are discussing that, remember, we are all looking at growing. And growth means then grow where we are or diversify our income streams. You remember we talked about that in the webinar last week. How do we diversify the income streams that we are coming through? Oh, wow, I love this. These are coming fast and furious. Selling stationery, B&B business, business training and advisory. Okay, thank you very much. You see, ladies and gentlemen, it all depends on where you are and where you are coming from. Now, we were discussing about increasing our revenue, and there are very many ways we can look at it. One could be to increase prices. And when you're increasing prices, you have to be very careful that you do not lose the consumers that you have. Increasing prices also means demanding a higher salary. Demanding a higher salary means we have to invest. Come to business owners. I'm increasing my prices. If I'm increasing my prices, it means the value that I am giving should either be better than what I am currently offering, or I have introduced something new. And I still tell my clients, this is what I can be able to do. And as you're doing that, using the budgeting templates, you will be able to identify where the leaks are. My income is increasing. What is happening to my costs? Am I being able to manage my costs when I look at them? Or have my costs increased and the profit that I have now obtained from either increasing prices or introducing new products is going as fast as Grace's was going initially? Ladies and gentlemen, myself included, it is important for us to keep track of our income. Even as we are growing and we are increasing and we are doing new things, it is important for us to not lose track of what we are doing. And there are very many ways for us to be able to do this, to track the income. We can use our digital tools not only to market on social media and to expand our reach, but also to track our expenses. And we will see that in the subsequent conversations. Very easy. This phone that you're holding in your hand has the ability to have a Google Sheet on it, which you can use to track your business and your personal expenses, able to track your investments. And for an advanced stage, just download the Zuri app and use it to see how far it can be able to take you. Now, why is this important for us to track? I go back to my friend, let me get the name, who said, you do not know where to start. Most times when we get ideas and things we want to do, sometimes we feel lost. And we are like, wow, this is a challenge, but I don't know how to do it. One of the things that we can do, and we always say in all our trainings and remind everyone who is coming to be in our circle, that it is important to start small. That business idea that you have, you can always start small. Okay? Start small. For your tracking and your budgeting, start small. What can you manage to be able to grow? What resources are available for you to be able to grow? And homework that I am going to give you. For the business idea you have identified and you would like to grow and keep on going fast, look at what resources are available for you and to you, and then look around you. Who else can you partner with to be able to grow that idea? I want to sell mangoes worth 100,000. I don't have a farm, but I have identified my market. What do I need to do? Go and look at what mango farmers are around me or who is selling mangoes and doesn't know what to do with them. Yesterday, we were in a meeting that was talking about the potential of trade in Africa and what we can do. And it was so sad to hear that we have a lot of food loss. For those of us who have picked here an idea of starting a food business, what if you could value add that mango? Work with those cabbage farmers who don't know where the market is. You know where the market is. You know where the cabbages are. Figure out how you partner with them. Don't be afraid of partnerships as long as they are clearly defined. Remember, why we are doing all this is because you have set for yourself an income goal and you're telling yourself, I think by getting these mangoes and selling them, I can get an additional 200,000. So now that 200,000 goes into your budget. This is what you would like to achieve. How would you like to get there? And you're telling yourself that by doing this 200,000 and eventually removing all my expenses, I'll be left with money like grace that will allow me to offset my debts and also be able to move forward. And as you're doing this, and you're going through the budgeting, also surround yourself with positivity and a growth mindset. Attend meetings like these ones that DTB has gladly offered. Attend it. Come see. What are you doing about it? How can you grow? What tools are available, like the one that has been shared and the ones that will be shared, that will help me get closer to my objective? One of the places we always get shocked when we look at is our M-Pesa statement, and we'll discuss it a bit later. And we ask ourselves, this money actually came in and out. Where did it go? But by tracking, you are able to grow. By understanding that I am already generating revenue, it means you can generate more revenue. So look at your skill set again. How can you use it to grow? Look at the resources you have again. How can I use them to grow? I have identified this opportunity. I want to go to the bank and get a loan. Okay? Go back to your budget. That by the time you're coming to talk to Mantui and the team, you're telling them, this is the opportunity I have identified. This is how I will be able to grow. And this is how I will be able to pay your money. You do not rise to your potential, you rise to your plan. Your plan includes a budget. And a budget is a must-have, either when in employment or in the business space. By us tracking our money, we will be able to grow. We'll see, okay, I was able to generate X amount. I have a surplus on this business idea that I have been growing. I can grow it further. How do you grow it further? By making sure that you can identify first how the money had come. I want you to just have a look at that screen for a minute. These are tracking habits in Kenya and Africa. 67% of the households don't use budgets. 55% of M-Pesa users, they forget what they spent money on after a week. And across Africa, 36% of us don't track our expenses regularly. 60% across Africa, 60% of employed individuals lack clearly monthly cash flow views. I want to give you another homework. Every time you send money or spend money, look at the costs of either sending or the cost of transacting and add how much did that use of M-Pesa cost you at the end of the month. And the reason I'm asking you to do this is not that you stop using M-Pesa, is that in your budgeting, account for it and say transaction costs on average ABCD. Why? Those transaction costs are part of your spending. That will help you identify, are there any other cheaper ways for me to transact? Or what are these things I was transacting on that are costing me either 200 shillings, 300 shillings, 50 shillings, moving forward? As we are doing that and we get ready for question and answer, I went for my haircut. Yes, I have hair. I know I look bald, but I have hair, so I normally shave. So the most interesting thing is that those of us who shave twice a week always meet at the barber shop. And where we go to have our haircut, there is this Chinese client who always comes in. And he made us laugh because the owner of the shop is trying to make sure that he can track how much income is coming in. And the Chinese gentleman always comes with cash at hand. So when we asked him, why don't you want to spend this amount? Well, he showed us if he has to shave twice a week, him transacting at the shop, that's 30 shillings. So 30 shillings times 2 in a week is 60 shillings. 60 shillings at the end of the month is 240 shillings. 240 shillings times 12 is 2,400 shillings. And if he does that, it's about 3,000 shillings. If he does that, those are additional 7 haircuts that he can have from the barber. So it's very interesting when we look at how we track our habits. For us, we don't think about that 30 bob. We are like, okay, let me just spend it. But you see how he's looking at it? He's tracking it. And he told us where he comes from, you have to track every coin. It doesn't matter whether money is coming in and flowing, but you have to track every coin. He runs a hardware across the barber shop. So we all know that he generates revenue, but he said, no. If I do this at the end of the month and at the end of the year, this is what is happening. But do I have this money in cash? Yes. Can I pay for it in cash? Yes. That saves the amount of haircuts that I do. Very interesting. So that's why I wanted you to look at it. So we need to be able to categorize our spending, even as we are looking at our budgeting. There are those expenses that we cannot get away from. Those are fixed, like your rent is fixed. Your school installments for maybe your school fees you're paying installments, those are fixed. And then there are those other expenses which are variable. Your shopping, your spending in terms of eating out, upgrading equipment. Those are variable expenses. Then there are those seasonal, occasional expenses. You have to contribute to your friend's wedding, or you have to go on holiday. Those are occasional. So this is what you will do. It's all in the template. be able to categorize your spending. That allows you to see where you're going and where there are gaps and what you need to improve on. We are differently placed, we are differently abled, and what that means is then we can be able to track our things differently. We can either track our things manually using mobile apps, using mobile money tools, using digital business tools, or using bank and card apps. Again, it varies and on what you want or what your financial goals are and your objectives of tracking your finances are. For example, if you are low on tech, then you can use manual tracking. You can use the Excel formulas, you can use templates, you can use the Black Ledger book. You know the ones Mama Mboga uses to be able to track, this is how much money I made, this is how much money I went out. Mobile apps we recommend for freelancers and individuals. If you're a heavy user, use mobile money tools. Why? It will generate for you statements which will allow you to then come back and look and see. And then now with AI, you can feed, but a secure AI, you can feed your statement and then it can help you do mathematics. You can also just get the Zurit app. It will help you be able to move forward. Now for entrepreneurs, we also recommend using digital tools because they help you track your sales, your invoicing, your accounting. Some of them are free. Some of them are paid if you're a heavy user. And then we can also make use of the bank apps that are there. DTB also has one. It also helps us be able to see where we are going wrong, where we can improve, and what else we can do. So as we take a break and go to Q&A, I want you to review your last 3 months of M-Pesa and bank statements and receipts. Where has your money been going? Like the Chinese man, Zhang. Did you find yourself spending more money paying for items while you have access to cash and it would be cheaper for you to pay in cash? Or it disappeared and went up in smoke and you cannot account for it? Remember, clarity creates control. The objective of this exercise is for you to take back your power and your control. That when you're coming back to DTB for a product, you're better able to defend yourself. You're even confident to take a loan because you would like to go further. Remember, one of the ways of growing your income is leveraging on financial institutions to help you achieve your dreams and objectives. I stop there for questions and answers. Any questions, Mantui?
So for now, we've answered some of the questions on the Q&A tab. So I think we can go on for a bit and then answer questions after like a few minutes.
Okay, thank you. Abayo, thank you for being honest to yourself. Mantui, someone says they are unable to download the template. So I think you'll be able to help them.
Yes. So let me just reshare. What you can do, you hover your cursor on the template that is shared on the chat, and at the top, at the bottom left, where it says click to open, please double click on that, and it should be able to open on Excel. We will also work on sending it together with the slides and recordings that we usually share on your registered email. Yeah, thank you.
Thank you, Mantui. I love the comments that are coming on chat. Reni, I can see you and Zhang are friends. When you have cash, you avoid M-Pesa. Good. And for those of us who have admitted that you don't know where your money has been going, That is the first step in financial freedom. Because then now it allows us to go back down and finally figure out how do we start the recovery journey. And the recovery journey is simple. Let's keep on tracking. I know at times we get tired, but look at it this way. I don't know how many of us are over 60 in this space at the moment. According to the Kenyan government, about 2.7 million people are over 60. Wouldn't it feel good when you're over 60 and you don't have to hustle so much, but you're free because your money is working for you? So investing in your tracking devices now enables you to be future free from drama and issues. And also, one other thing that we have realized is that in this journey, get an accountability partner to work with you. That is one of the biggest secrets. Get an accountability partner. If you would like to know how to get an accountability partner, talk to Mantui, who will put you in touch with us at Zurich, and we will be able to help you craft your journey going forward. How do you get an accountability partner that enables you to get financial wellness and financial freedom? Crucial for us to grow. Remember, when you track, you take back your power. I know at times it gets tiring. That's why we have got digital tools to help you continue. And that our Zurich app also reminds you that, hey, you've not been updating what's going on. That kickstarts you back to the journey of, hey, can I start running? So, ladies and gentlemen, now that we have gone back and we understand that we need financial freedom, choose the tools according to what it is you're doing. And as I said, the tool is your accountability partner, and you can also get a human accountability partner to work with you in this journey of financial wellness. The reason Diamond Trust is investing in this and making sure that you're here is so that you can grow. They care about you as a customer, and they care about your financial wellness, and they would like you to continue being their customer. And that, ladies and gentlemen, is joy, because that is consistency in growth. So look at it and decide, do I want a tool that is tracking my personal or my business? Do I want a tool that is just personal? Remember, the tool we choose is one that is supposed to help us be consistent in our growth. And consistency also means updating. You could have tools that you update daily. You could have tools that you update at the end of the month. The most important thing is update. So that at the end of your period, whether it is monthly, whether it is weekly, you can be able to assess and see, where am I at and where would I like to be? Remember, tracking gives you back control and power. Tracking enables you to be able to move forward consistently. Now, when you have tracked your expenses and you've come and you've seen this is where the money has gone to, and thank you for those of us who have said, I have identified this gap, I have looked at this is what I need to do. It will help you now have a funnel, like a sales funnel. And when you're budgeting, you will look at it and ask yourself, what are the most important essentials that I cannot do away with? Then help you reduce your debt levels. By looking at it and seeing, I can get rid of these expenses, these ones need to remain. Whatever surplus you make then enables you to be able to decrease your debt levels. And as you decrease your debt levels, what also that does is that it enables you to start saving for other goals. now that I have reduced this debt, I have paid it off, the money I was paying off this debt means that I can take it and allocate the money somewhere where I can be able to save for my future. And then lastly, you will be able to continue cutting down what is not essential and leaving what is essential, and making informed choices that allow you to be able to grow as an individual. This is crucial for you to identify what works, what does not work, and then how can I make it different, and how can I be able to grow. Let's look at Jane before we dive down deeper. So Jane is a 34-year single mother living in Nakuru. She works as a primary school teacher and earns a net monthly income of 55,000. She also makes about 5,000 a month selling mandazi at school during break time. So her monthly income, her salary is 55, her side hustle is 5,000, total income 60,000. Where does she spend her money? She pays rent 15,000, food and household items 12,000, transport, matatu and fuel 6,000, school fees SACCO 8,000, SACCO contribution 2,000, loan repayment 6,500, entertainment and eating out 3,000, airtime and data 2,500, church giving and support 2,000. So her total expenses come to 57,000 shillings. So I would like us to pause and reflect and ask ourselves, if you are Jane, we can put it on chat, Bantu will help us read out. If you are Jane, what would be your top 3 financial priorities? Looking at this, what do you think she cannot do away with that she will have to keep on spending her money on?
We have different answers coming in. So rent, some are saying food and school, rent, school fees, the loan repayments. Yeah, but majorly rent and food is what is coming in.
Rent and food is what is coming in strongly. Okay, thank you. Transport and fees, okay. So those would be your top 3 priorities. What then do you think you would do if you are Jane to reduce your financial stress? What do you think you can do away with? Remember, there is no wrong and right answer. It's a case study. We are all giving our answers. We are teaching each other. You're also making me see different perspective on some things. Okay, Mantui?
Reduce on rent, reduce airtime and data, save for a phone instead of buying with a loan, basic needs first. I think loan repayment can be reduced to gain purchasing power. Yes. That's
okay.
Moving to a cheaper house. Yeah.
Thank you. Thank you for those answers. Thank you that you're doing that. And so where do you think Jane should then, let's say she has saved, now that we have reduced our rent, we have paid off some things, we have moved to a cheaper house. What do you think would be Jane's priority? Savings, or then now moving to a bigger house? Mantui, any answers coming in?
Yes. So we are getting mostly saving and investing. Yes. So majorly savings and investments. Yes. And repayment, of course, of the debt.
Savings, investments, okay. paying off of the debt. Thank you. Ladies and gentlemen, the purpose of this exercise is for us to also look at our own situations and ask ourselves, what are our priorities and how can we be able to save? In one way or the other, we are all Janes in our positions. So I am hoping that this exercise will also help us look at our own positions and ask ourselves, where else can we save money? If she can get a good place that is not far again and not eat on her transport costs, then she can move to a cheaper house. And food and household items, then she can also go for bargains, as we will see in a short while. She can also look at her transport costs. If it is essential, leave it. If it is not essential, look for another way. Could it be that I am driving my car and I'm going to park it the whole day, and where I am going, maybe it's cheaper for me to use public transport and save on parking fees and fuel? Could I negotiate a cheaper, like a lower school fees repayment option, but still maintain my child in the school that I want? For the period that I am recovering, can my SACCO agree for me to just reduce by 200 shillings? Then I can always come back and top up when I've finished paying off my loans. The entertainment and eating out, can I save on it? Is it essential that I grow myself now? Because if I have more capital and I am making mandazi worth 5,000, could I then have additional capital from here, increase my mandazi profit to 10,000 a month, then come back to be able to do what? Increase my SACCO contribution or increase the investment that I am doing. The airtime and data that I am using, is there a cheaper option for it? And what am I using this airtime and data for? Is it to help me sell my mandazis? As a teacher, now that I have looked at this, is there another way I can earn my money? Could I be a CBE tutor for the parents who are around me and take them through what CBE can be able to do at a small fee? Remember when we were talking of business opportunities that are around us? Now it calls us to look at ourselves differently. That these are my skills. I would like to increase my income. What else can I be able to do? That the additional money that I am getting, I can top it up somewhere else. The loan repayment I am getting for my mobile loan, can I do a comparison? Is there anyone else who can give me this loan cheaper? And what exactly did I do with this mobile loan? Was it to go to the mandazi business? Or was it for something that I cannot even explain what happened? That's what I would like us to do and look at ourselves, even as we move forward. I am Joe, there is Jane, there is Mike in the call, there is Tom, there is Elizabeth in the call, there is Lillian in the call. Let's look at our expenses. What are essential? What can I postpone? Can I stop eating out for the next 3-4 months so then I can pay off my debt and then I can have enough money to save, put in an investment that will allow me then to even eat out? Or the money that I get, put back in my mandazi business so that my mandazi business can grow? Or take that money, invest in a skill that when I'm coming to talk to CBE parents in Nakuru, then on Saturday they can bring their children to me for extra top-up or additions, or even help them be able to do their assignments. CBE is very manual. Truth be told, not all parents are technical. Can you have that tuition? Bring those CBE children. How do we make, I see them making models. How do we make, and for a small fee, work towards reducing your financial stress? Any questions up to there, Mantui, before we take our 5-10 minute break?
Yes, we have a question from an anonymous attendee. Let me read it. It's a bit long. So I have been out of employment for 6 months and my savings are dwindling. Previously, I haven't been a good finance manager too, and thanks to this training, I'm learning a lot. I'm currently setting up a consultancy and it hasn't been easy securing well-paying clients, and job seeking has been so exhausting. To get through this tough period, would it be wise to one, request for support from family to cover a few months' expenses as I try to get a stable income, and then also sell off my car and use the funds realized to stabilize. My only fear is that I might need the car for efficiency as I market and attend to my consulting clients, and I might struggle to buy another one if I do away with it. What would you advise?
Good. Thank you. I know Liz will also chip in on this. The first thing I would ask of you is, do you have a plan for your consultancy? And number two, have you identified who is your target client for that consultancy? The reason why those two questions are very important is you need to have identified a niche. You remember the exercise we did of identifying issues that are around us? Then now let's look at your consultancy. What are your skills in? And what problem have you seen that your skills are dealing with or sorting the problem they're sorting out? Then ask yourself, is there a market for this kind of consultancy? And if there is a market for this kind of consultancy, where do I get my clients? So it's important for you to do a job research, a thorough research of your business and where it is you'd like to go to. Because even if I ask my family for support to cover a few months of expenses, their question would be, what is the sustainability of it? But when you have a good plan in place and showing them, this is where I am at, this is the issue that I have been able to identify, and this is where I am going to, then you also have accountability partners. Remember the accountability partners that I was talking to? Then that if I am giving you money, then I want to see what it is that you're doing. Okay? So then the plan helps you be able to have an actual plan that you can be able to run. Now, with your marketing plan in place for your consultancy, if your clients are, let's say, on LinkedIn, then you develop marketing tools on LinkedIn that will help you convert those who are coming to you. If your clients are on Insta, then you will develop marketing plans that will help you be able to get those clients on Insta. Remember, our most important objective for you is, how do I convert? But conversion comes from clarity of idea, clarity of value that you're offering, and clarity of where it is I will be going. It's very important. Second off, you can sell off your car. But if you're selling off your car, again, there has to be a plan for those funds, a budget for those funds, such that you do not sell off the asset if you're saying you need it to be able to move around and it's not generating income. If you discover that your clients really do not care about the vehicle that you're driving, all you will be able to do is deliver the assignment, sell the car, then budget for the funds properly. Knowing that in this particular period of time, I can be able to generate revenue and buy another one with the money. But again, budget. But as you budget, have an idea of what it is you want to do with the money. So then that you don't take all the money and spend it on marketing and you've not calculated your return on investment on the money. That if I spend X on this platform, then this is how I will convert and this is how the money would come back. We would be willing to also, now that you are anonymous, you can get in touch with Mantui. She can put you in touch with Liz and I, and we can also help you have a look pro bono. Where are you, and how then can you structure yourself to be able to sell the skills that you are offering? So the issue is clarity. You're going into business, clarity. This is what you're doing, clarity. You're looking to stabilize your income, clarity. Very important to have an idea of where it is you want to go.
Great.
Mantui?
Yeah. Thank you, Joe. I think we can answer one more question and then proceed on break. And this is also an anonymous attendee who's asking, please comment on the pros and cons of digital loans.
Now, digital loans came to both save, grow, and sometimes stress, depending on what it is you're using your money for. The most important question to ask yourself as you're getting that digital loan is, what do you want to do with it? Remember, just like going to the bank, if I am picking a loan from the bank, it should be to help me increase my value. I'm buying a vehicle. Why am I buying a vehicle? I could be buying a vehicle so that it can help me get to work faster. It can help me get to work better. It can help me be able to reach my clients. But if you buy a vehicle that then the outflows for maintenance are higher, the loan repayments are higher than what is coming in, you're in trouble. Stop. Don't do that. Come back to the loan. It's possible you could be having an emergency and you want to deal with the emergency immediately. Look at what are the repayment structures that mobile loan is giving you, and what is the interest rate that you're going to pay. There are loans that you would even take, and maybe in like 2 or 3 hours you need to pay it back, and the interest rate is like 20 or 30% of the money that you got. And the income that you're getting to come replace this loan, can it support both the repayment and the interest and not leave you at a negative, a worse off position? Those are the questions you should ask yourself. All banks now have digital loans to help their customers move forward. And that's the reason we are having the financial literacy class. What else can be able to sort out that situation? Can you delay? If you can delay, fine. If you can't delay, look at the interest repayments. Allow me to ask Liz to just add to that a point or two.
Thank you, Joe.
Dr. Elizabeth.
Thank you for the pressure. I'll be doctor. So now, in terms of digital loans, yes, the convenience works completely. However, at what costs? So that is for me the biggest question. And when you think about debt, when we're thinking about debt management, which I think we covered slightly last week, one of the things that we must do is actually get out of digital debt, because at least you're paying 7.5% per month. For that is the cheapest that you'll be getting, and then you're being charged another maybe 5% for arrangement cost. So when you think about all that cost, it's very expensive. And you remember if you have on average Kenyans have mean mentally, we are reminding you. So instead of you actually thinking about how to grow your wealth, you're actually being reminded how to pay back your loans. So for me on digital loans, as much as possible, you just take it when you must do it, but most probably, please, there is no way to, if there's a way to avoid them, the better. If you have them, it's not the end of the world. Let's speak to DTB, they can consolidate for you, they can check for you, so that at least you have one loan, you're only speaking with one person, for the sake of your mind and also for the sake of your pocket. Thank you. Back to you, Joe.
Thank you. Thank you very much, Liz. Mantui, back to you.
Thank you, Joe and Liz. I think we have quite a bit to chew on as we go for the break. So we shall proceed on a break and come back at 12:10 p.m. So see you in about 6 minutes. Thank you.
and make sure that you're able to take control of it. So again, what are your 3 top most consistent income sources? Are there incomes that are seasonal and predictable? And currently, the money coming in, how are you tracking it? So fine, my friend who was starting the consultancy, let's say he's come to me, he's paid me for that first session for me to sit with him. He's paid me 5,000 or he's paid me 3,000 or even he's paid me 1,000. Where do I put the money? Can I account for it? Or by evening, I'll have told myself, hey, Moses paid me. Java has an offer for tea and coffee. For those guys who leave job in the evening, can I go and sit and tell myself, that was good work consulting. I have taken the tea. So where has the money gone? Can I track it? No. So it's important for us to be able to know, where are we going? This money coming in, can I put it somewhere before I start spending? Or that's the day I will see on Insta, the John Shoes has sent me something. And that's the day Lisa said, everyone, there is a bonus at Zurich. Then immediately, I don't even put the money in my account. I tell John Shoes, those shoes, can you put on a motorbike and send me 2 sizes? I try them out. It's important for you to track your money. Delayed gratification is very important. And Liz, that is not to say if you give me money, I'm going to buy shoes today. No, I will make sure that it goes to my savings account. I was just using myself as an example. So then this is how we look at money coming into the business. At least make sure that 40 to 60% of the income coming in is recurring. Okay? That you are doing this and this money is coming in every time. Okay? This is how the money is coming in. 40 to 60% recurring. About 20 to 40% is money that I can come in and can help me be able to grow. Can I give offers? Can I give discounts? That this is constant coming in, but can I boost? Okay? Can I bundle the goods that I'm selling if I'm having stock, which we discussed earlier, that is not selling? Can I put this cap and this pen and tell them, if you buy these 2, this is the price. Reduce the price slightly, making sure that you're still taking care of your costs, but I'm boosting the revenue coming into my business. I get rid of stock, because as long as stock is not moving, that means I have no cash in my pocket. That way, we will be able to build that 10 to 15% buffer that we are talking about. And with the 10 to 15%, then that means we have cash to be able to grow. Maybe I am an architect. There is a new software that has come that will help me be able to be a better and faster delivering projects. By having additional money, I can invest in my growth. Remember, we talked about upskilling. We talked about upscaling. We talked about retooling. Very important. That helps us be able to build the buffers that we want. Why do we want these buffers? If we build the buffers, then the investment classes that we were taught by Coach Liz in the first class and in the second class will be a reality. That I'll have money and say, hey, my financial advisor, this is what I have. How do I spread this money? We'll discuss that in the class next week. But that allows you to be able to build. So these are the steps we take. Number 1, make sure that the income can come in regularly. And as the income is coming in, track it. Like I have said, I am not paid. I call John Shoes to bring shoes for me. Then, will I be able to manage my growth? No. Will I know where I'm going? No. By tracking your sales and tracking the money that is coming in, it will also allow you to see, what else can I do better? What can I improve on? to make sure then I can generate not this income only consistently, but something new that I can introduce. Then that when I am doing this, I can do a market survey for my clients, wherever it is they gather, whether it's physical, whether it's on Insta, the digital places, or in church, and ask them, what else can I do for you? The what else you can do for you, then your product becomes customer-centric, and you can keep on introducing new things or even improve. They could even say, we don't like the packaging for your cakes. Can you improve on your packaging? If you improve your packaging, will they buy better? Yes. For you to grow, can you bring in a professional to help you dissect some of the feedback and survey you're getting from your customers that will help you move forward? Yes. And as you do this and the income keeps on coming in, then you will be able to build your cash buffer and you'll be able to grow. So remember again, track what is fixed, what is variable, what is seasonal, even for business owners. What is fixed, what is variable, what is seasonal. And the objective is to have as few fixed costs as possible. Your variable costs will fluctuate with sales, meaning then you can plan ahead and have offers for people to come and buy if you're in business. And then look at your seasonal costs. How can you manage them? And because you already know, I plan on taking my family on holiday to Mombasa, or I plan on taking my family, or I plan on going up country over the holidays in December, then you start planning for it in January, not in September, putting pressure on your business. But make sure then that your business can afford it. Then put away something small. Put away something small so that when that period comes, you're not shocked. I laugh because where I come from, we make traveling an event, and sometimes we forget that after we've come back from the event, there are expenses in January, and they hit us so hard, and you're in shock asking yourself, okay, I was up country, but where did all this money go? Yes, we did not plan for those seasonal costs. So it's important for you to have a look at them. So when we look again at businesses, I know there are some of us employed and some of us in business. These are some of the reasons why SMEs fail based on the money that they got and they did not manage well. One is poor cash flow, another one is overspending, another one is mismanaged inventory, another one is unplanned expenses, mixed finances, staff spending. Now, all these problems can be solved using budgeting tools, because then you will be able to know, this is how my money comes in. These are the things I need to spend my money on. I bought stock that didn't move. How do I move this stock out? You know, and making sure that as you're moving the stock out, you're not selling at a loss. You're not a charity. And even charities now try to be profitable. Having a buffer allows you to have reserves to be able to change whenever your equipments break down. Having a budgeting tool allows you to separate your personal and the business expenses. And then having a budget also tells you how much will you spend on your staff on airtime, how much are you spending on lunches, what can you be able to improve on? Is there someone who can help you? Maybe you have to give your staff lunch. Is there someone who can still give quality meals at an affordable cost? What are they doing with the airtime that they're getting? Is it generating revenue back for the business? Ladies and gentlemen, myself included, it's important for us to do that. Another reflective exercise that you will do is to ask yourself this as you sit down and we get ready for investment next week. Have I separated my business and personal expenses? How can I account for them? And if I have done that, can I start separating? Remember, when we come to the bank to ask for money, what is one thing they always ask us for? Where are your statements? If you're borrowing as an individual, or if you're borrowing as a business, they will tell you, can we see your management accounts? Yesterday at the meeting we were in, there were bankers there, and they told us the biggest challenge they have and why they cannot disburse as much capital as they would like fast enough is having records which are not verifiable. And verifiable records mean, then the data that you're giving does not make sense. But you can imagine if you have a budgeting tool, and you can imagine if you're tracking your income, your expenses, and you're having those records. If the bank calls you and asks you, 1, 2, 3, you are able to defend. Your records becomes verifiable. And because your records are verifiable, then your funding prospects become better. Don't we all desire to grow? Don't we all desire support? But the person coming to support you needs to understand that you have control. So once again, the purpose of this exercise is for us to be able to take back control and be able to move forward. So all is not lost. The best time to have started this was yesterday. The next best time is today. The next best hour is immediately after this class is done. Start. Start. Start from where you are and keep on growing. We all desire a peaceful life. And a peaceful life means we plan for it. And planning for it means we draw down strategies that can help us move forward. So we can look at it from very different angles, but it all calls for our priorities. What are our financial priorities? We need to be able to save to grow. We need to be able to invest to grow. We need to avoid last-time purchases, especially for those of us in business, by having proper stock inventory systems. When we do all that and we have extra cash in our pocket, then the suppliers who make us be able to serve our customers will also come back to us and support us because we are paying on time. We can only pay on time if we have control of our cash flows. We can only have control of our cash flows if we know what is coming in, what time it is coming in, and what time it needs to go out. Financial stress then gets to reduce. The objective is not only short-term survival, but is long-term growth, that you can keep on investing and that your business can grow. And that as your business is growing, it keeps on generating more revenue for you. So for those of us in business, this is what we suggest to you. Consider it even as you do your budgeting. And because the slides will be shared with you, you'll have an opportunity to go back, look at it, and see what works for you. Again, it depends on your business models. It depends on the nature of business that you do, and where you can be able to get suppliers and be able to run out. So look at your cost of sales, look at your operating expenses, pay yourself a salary, and then, most importantly, something that we cannot avoid, be compliant. Be compliant. Taxes and other regulators, they are not our relatives, but they help us facilitate our growth. And the ability for you to open your mouth and be able to shout because your tax records are in place. By being compliant, it also helps you grow faster. As I have said, you'll open your mouth, you will market some more, and even if anyone comes to check your books, they're in order because your records are in place. And then most importantly, because we are going and marching towards investments, you will be able to grow a buffer. So consider the knowledge that we are sharing with you in terms of how you should allocate your revenue. And those are 1, 2, 3, 4, 5 accounts that will enable you be able to move forward. So in summary, if you're an individual, the most important thing is first, shift your mindset. Understand where you stand, accept, agree, adapt, adjust, and move forward. And moving forward will mean you will build a realistic budget. You will be able to break your debt cycle. And by breaking your debt cycle, you will be able to have additional money to invest, whether it's MMF, whether it's a 50 by 100, whether it's in a treasury bill, you will be able to grow. And it's a cycle. You grow, you get to a certain level, you have to shift your mindset and tell yourself, this is where I was last year. This is what I've been able to achieve. What do I need to do to be able to grow further? Because now my position is better. If you are in business, again, understand your financial position, separate your finances, build a budget, train yourself, and most importantly, accord the training also to your team, that they may understand the things that you would like to do, where you would like to go to take the business. You are collaborating with them. So if you do not teach them financial wellness and you're doing it alone, then they might just misspend and say, hey, Lisa's got a lot of money, let's spend it the way we want. And then lastly, track your growth. As an individual, as a business, track your growth. Where are you spending your money on? What can you reduce on? How can you improve your income? And then how can you be able to grow? Mantui, any questions on the chat space?
Thank you. Thank you so much, Joe. I think even as we go to the chats, I'd like to say that even in the chats we are, guys are sharing about how insightful this has been. And there's a very reflective mood, I believe, from participants with some of the, insights that you have shared. And I'd encourage participants to continue sharing on the chat what has stood out, what you will be implementing, what you will be changing. We love receiving your feedback so that we are able to better design the program. So a round of virtual applause for Joe for that great session. Thank you so much, Joe. So I can proceed to read some of the questions that we have received, and then I will also allow some participants to ask questions. So you can raise your hands for those who would want to ask the questions themselves. I will allow you to unmute. But let me begin with the ones on the Q&A tab. We have a question from an anonymous attendee. who says, they say monetize your passion. Now, I am passionate about music, specifically rapping, but then art takes time to actually start paying. But when it does, then it can be major. Now I am currently doing an 8 to 5, and at least it's sustainable, but I still feel like I should also explore my passion. So I'm caught in a dilemma. What do you think would be the best approach to this, keeping into consideration that art really requires full attention and a lot of time and money invested into it? Yeah, so I think this also speaks to people who are maybe passionate about other things that are not necessarily their 9 to 5. How can they handle that? And I think I'd like to join that question with another one where we are told people like us that operate law firms and we don't have predictable income, how do we survive? So for guys maybe who are self-employed, how can they plan their money better? Thank you.
All right, thank you very much. One of the ways to be able to monetize your passion is first to look at the gaps that you have. And if you have already filled in those gaps, then ask yourself who will benefit from the passion that you are doing or you currently have. Remember, business is about, when you're monetizing, that means now it is a business. It is about a solution. So if I am playing guitar, who is that who is going to take up my guitar skills and see the value that I am giving them and pay me? That would be the starting point. Another way for you to be able to start monetizing it is by having a tiered approach, tiered or tired approach, depending on where you learned the English. Yes, you're doing an 8 to 5. What do you do after 5 o'clock? Are you practicing on your skill? If you are practicing on a skill, is there a place that is near you where you can go and offer your services as you practice your skill, so then that people can get to know who you are? If it is rapping, what are you rapping about? Is it common problems? Is it about love? Is it about social justice? Look at places where these activities are happening, then ask for an opportunity to stand in and talk. For example, there are always open mics happening across the country now. Go in. At first, don't go and tell them I'm charging you 100K, 100,000, and no one knows you. They'll not pay you because they cannot see the value that you're giving. So first, go into these spaces, see where you can fit in, and start rehearsing. You don't have to give it a lot of time. You have an 8 to 5. You also have to rest. Figure out, where can I go and do this, and start. You could also use the digital space and start creating a community around it. Open a TikTok, open an Insta, rap. What are you rapping about? Put it, use YouTube Shorts. Then call people to come and give you candid feedback. Create a community around you. Let them give you feedback. It might be painful at times. They might tell you, hey, we can't even hear what you're rapping about. That means change your tone. Or, hey, your rhymes, we can't understand. That means figure out your audience. And you're not alone. I tried singing as a career one time in my life, and I thought I had a very good voice for singing because I had sung in the choir. And I went to the studio and I told the producer, let's do this. The producer told me, just stay in church because it might be a strain if you're called to go and do this physically and you cannot do it. So also get feedback just to make sure that your passion is aligned to what it is that you're trying to do. Okay? Then, for those of us who operate service businesses, we know our income is cyclical or cyclical again. Have a budget. So then that the budget allows you to pay what is essential and allows you to live even as you figure out how do you grow your income. And I love it that you're operating a law firm. Population is growing. From where you sit, how else can you add to the revenue that you're doing? But when the cyclical income comes in, for example, when you've been paid that 1-2% on conveyancing fee, my friend, please do not run to the motor companies on Kiambu Road, on Ngong Road, and buy yourself a car that will consume fuel of 18,000 shillings a month, and you don't know when the next income is going to come in. It is important for you to budget and do a budget. Like monthly, this is how much we need. This is how much my office will need. This is how much my internet will need. This is how much I need to survive. And then we figure out, what can I do from here? That when the money comes in, how long can you stretch it? But as you're stretching it, how then can I market my services more and be able to stand out, then that I can get additional business? I don't know if the legal laws allow. Could you ask for your current clients to give you referrals? Could you ask your current clients to open their networks to you? How else can you be able to market your business? Now, by marketing your business, that means then you will be able to get more revenue coming in. Remember, we said, after we know this is what we are doing, this is how we can be able to grow. Mantui.
Great. Thank you. Thank you, Joe. I'll allow Tabitha and Eunice. I see your hands are up, so you can ask your question. Please proceed, Eunice.
Hello, good afternoon. I have a question. My question is, I have an income where still I'm earning on commission, and it's not after a certain period of time, maybe after 3 months or after 4 months, it depends. So I tried for the option of starting up a business, but then I have a problem of managing the business because my income is not consistent. So I find myself using my personal saving for the business. What will be your advice on that? Thank you.
Thank you. That was Tabitha?
That was Eunice. Yeah.
Oh, that was Eunice. Thank you. Thank you, Eunice, for that question. I like it. You earn on commission and it's not regular. That relates very closely with what we have talked about, those of us in professional services. The commissions you earn, are they based on a target? Are you achieving your targets?
Yes, the money I earn, the commission I earn, it's, yes, the target I have, but it depends because I do real estate business, so it depends. Real estate, the commission are best, but it depends with the value of the property that you're selling. So the earnings are good. Just when I start business, I have a problem with managing now the business because of the income is not consistent. So I find myself most of the time in trouble in terms of keeping up with the business because of the income. I have to take my personal savings or go and take a loan to keep up the business as I wait for the next sales. And then also I have another problem because I live in Diani, which is very seasonal. We depend on tourists. Like right now, it's very, very low until September. That is when we start high season. Everything here depends on tourists. So also I have that problem of managing my business. What will you advise? Or should I just stick with investing money on lands or circles?
Okay, thank you very much. Yes, you can invest your money on land on circles, but also remember what is your investment goal? That is a question we were asked in our first 2 webinars, and we have talked about it again today. Now, let me start. You have asked three things. Number one, where I would like you to start from is go and conduct a reflective exercise and step back. How much is it costing you to run your business every month? Put that down and project it. Then go back and look at the last 1 year. How did the income come in? How did it support your business? When you have calculated what your expenses are, and that is the fixed and the variable, and these are expenses that you cannot avoid, then that becomes the base of your target, your sales target. So every month, you must either do sales to this level for you to break even or more for it to keep on pushing you. Then that means is that you will not sit relaxed. That if this month I have hit, I know this money will stretch the business for another 3 months, then start selling immediately. What else can you sell? And if you can't sell directly because you're in sales, who else can you bring on board who will help you be able to sell or will give you something else that you can be able to sell? Look at collaborations and partnerships to grow your income. What else can you be able to sell? Who else is having a property in the market that I think can be taken up by my clients? Can I talk with them? Can I have a revenue share with them? That if commission is 3%, if we split this commission, the two of us, then at least I'll get something that will keep me moving. So it's very important for you to look at it that way. Number 3, you're in a seasonal place. Remember the exercise we played? Let's ask ourselves, what other additional thing can I do? I am in Diani. What are the business opportunities that are around me that I can be able to start? I'm trying to see what grows in Diani. I don't know if it's cashew nuts or macadamia or something. What else can you do? If you're in real estate, can you do a business that is closely related with your real estate business? Are there Airbnb owners that you can be able to talk to and help market their businesses? Then they can pay you a commission, even as you wait for the other tourist season to come up. People are always coming for conference. People want to sleep. Could you then also be a guide if this is your area and charge a small fee for it? Or could you form a class and teach the people around you how to maybe sell real estate or how to buy land? So look at what other additional skills you have that can help you be able to generate revenue. Thank you. Mantui?
Thank you, Joe, and thank you, Eunice. I can give Tabitha to maybe briefly ask your question as we wind up. Tabitha? All right, I think there's a sound issue with Tabitha, but thank you so much, Joe. What we can do now is perhaps I will ask you to just give your closing remarks. What's the one thing our participants should walk away from today's session on budgeting? That is, an absolute must have in the financial wellness journey as we wind up. Thank you.
Thank you, Mantui. The must have is that you must have an action plan. And that your action plan should be learning oriented. How can you improve your plan and how can you remain accountable? You must have an action plan, it must be learning oriented, and you must be accountable. Your learning plan and your action plan will help you know what you need to do, what risks you can take, what risks you cannot take, and where else you can go for help. So action plan is a must. The best time to have started was yesterday. The next best time to start is today. And the critical time to start is after this discussion. At Zurit, we help you not only with your financial wellness, but help you grow your knowledge, grant you accountability tools, work with you and have a support systems in place, Other than this, we also have other things that we've done, newsletter every week, support systems for you to be able to grow. And then we also share with you risk management plans, what is going on, what to avoid, and where to go. So, action plan. Today, the next 5 minutes will help you guide your tomorrow. Thank you.
Thank you. Thank you, Joe. I think that's a powerful way to end the session today. The critical time to start is today. And it would be good to, bump into participants 2 years from today, and we have maybe Eunice or Rose or anybody telling us that they intentionally started their financial wellness journey on 22nd May. So those are the stories we are looking forward to. Thank you so much. I don't know if Elizabeth has something to say, maybe even a sneak peek into what we will be having next week as we close.
Thank you. Thank you, Joe. That was powerful. Yes, you should have started today. The critical time to start is today. So the biggest problem that we have is postponing that we are going to do this. So the action plan that I request you do today. 1, make sure that you go to our website and subscribe to our newsletter, because that we shall keep you accountable. We shall remind you, this is the same mistake we had last week. So why are we continuing with the same path? So let's make sure that we are starting today. We shall keep you accountable. Subscribe to us, to our newsletter, and also follow us on Twitter, on all our socials, because we always tell you what is it that you need to do today. So next week, it's all about investments, because I think there are many questions. What do I start? How do I increase my income? So next week is all about increasing your income, the passive way, and also we shall have a few reviews in terms of active investments, especially because there are many questions about how do I increase my business cash flow. This was great. This was wonderful. So thank you so much. We also would like to get your feedback. If there is a topic that we must cover, please reach out to Mantui, because we will be able to cover it next week. We want this to be very impactful. Asanteni sana. Have a blessed afternoon. The website is Zurit, ZURIT Consulting. That is our website. And there are questions about whether we are the app. No, just go straight to their website. That's where you'll be able to create your path. You'll set your goals. You'll create a budget. We will have your debt management and also your investments all in one place. So asanteni sana, visit there. We discuss it next week. And actually another bonus, you will be able to upload your M-Pesa and we know where your money has been going, because that was the first starting point. What would it say about you? So we have partnered with Zurisco for you to be able to download your statement and it tells your story. Asanteni sana.
Thank you, Elizabeth. So please make sure to tune in next week as we cover investments. Invite a friend, invite a colleague, your employees, and feel free to even tag DTB and Zurit on social media. So thank you so much, ladies and gentlemen. See you next week for the last session. Same time, same place. Good afternoon, and the critical time to start is right after this session. Let's remember that. Thank you, Joe. Thank you, Elizabeth. Thank you, Faith and Lillian, for sign language interpretation. And most importantly, thank you to our participants. Have a good day.
Thank you, everyone, for listening in. Have a good day.